Good morning, ladies and gentlemen, and welcome to the BUSHVELD Minerals preliminary results for the year end in 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and, where appropriate, publish responses. These will be available via your Investor Meet Company dashboard, and again, we'll notify you by email when they're ready for your review. I would also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give that your kind attention, we would be most grateful. And I'd now like to hand over to Fortune Monjapello from BUSHVELD Minerals. Good morning to you, sir.
Good morning, and thank you very much for hosting us today. A good morning to everyone, and welcome to this presentation of our 2020 financial results. Some of you are familiar with the BUSHVELD story already, and others are new to the story. So this presentation, I will attempt to give a very quick overview of the company, our strategy, our vision, and what we do. And then we will talk to the results that we released recently. And then later on, we will spend some few minutes talking about the vanadium market and the outlook thereof, as well as talking to what our near-term plans as a company and what you can look forward to. I am assisted in today's presentation by our Finance Director, Tanya Chikanza, who will be presenting alongside with me. If I may start by just getting through the legalities with the disclaimers, which I will take as read. This slide shows a quick high-level overview of our capital structure. We are listed on AIM, have been listed there since 2012. Share prices of the 6th of July of 12.8p it's come down from highs of north of 40p a couple of years ago, but with a market cap of 153 million pounds. Our share register highlights a growing interest of institutional investors, although it's still very much a retail-heavy share register. We are covered by Peel Hunt, SP Angel, and Alternative Resource Capital, and by all means, do take time to read their analysis of the company. And what you will see on the chart on the right, there is the strong correlation of BUSHVELD's share price with the ferrovanadium price, because we're a vanadium-focused company, which is to be expected. An overview of the company. So we are a vertically integrated vanadium platform. What we mean by a vertically integrated, and not only vanadium company, we are a primary vanadium platform, and there's an important distinction to make. What that means is there are two parts to our business. On the upstream, we've got mining assets and processing facilities. Downstream, we've got BUSHVELD Energy, which is focused on the application of vanadium through vanadium redox flow batteries in the energy storage sector. The upstream piece, on the mining side, three deposits that combine for 549 million tons of a resource base grading between 1.6 and 2% V2O5, which is certainly tier 1 vanadium grades. The deposits are served very well with logistics infrastructure, and they are connected with two processing plants, low cost and scalable primary vanadium processing plants. There is only 4 operating primary processing plants for vanadium in the world. 3 of them are in South Africa, 1 in Brazil, and of the 3 in South Africa, we own 2 of those. And then in terms of the energy platform, we integrated through 3 main activities: the electrolyte manufacturing and sales. We're currently building a 200 megawatt hour capacity electrolyte plant, which we'll expect to commission next year. The plant itself will be the largest plant for vanadium electrolyte manufacturing outside of China. And then the second aspect to our business is our investments and interests in the manufacturing capacity itself through our 25.25% shareholding in CellCube, which is based in Austria and manufactures top quality vanadium redox flow battery systems. Then the third aspect is the deployments, where we play a very active role in developing opportunities for the deployment of vanadium redox flow batteries. And in the process, we create a market for our own products. So in terms of our investor proposition, 4 key elements to talk to. On the one hand, we are a green commodity for the future in vanadium. It's a compelling commodity. Demand is anchored in steel, making where it is used to strengthen steel, and by so doing actually helps reduce the carbon footprint of steel as well, because if you add 0.2% vanadium to a ton of steel, you double its tensile strength, which means that you need to use less tons of steel to achieve the same impact. But also significant upside for the commodity in the energy storage, particularly with the energy transition to green energy picking up. Vanadium redox flow batteries are set to play quite a significant role in the stationary energy storage sector. And then we have a solid foundation, as I said, with 2 of the world's 4 operating primary vanadium processing facilities, combined with long life mines, open cast deposits with tier 1 vanadium grades. We are a producing company, and that's quite significant to highlight, which means that we are a revenue generator, with near-term targets of reaching production run rate of between 5,000 and 5,400 metric tons of vanadium per annum by 2022. That's up from 3,600 metric tons of production last year, which is equivalent to about 3.5% of the global vanadium market. Studies underway will see us increase production further to between 6,400 to 6,800 metric tons of vanadium per annum in the medium term. And we retain plans to still further grow this to 8,400 in the longer term, still based on the 2 assets that we have, which is Vametco and Vanchem. And then the last point to highlight is, of course, the role we play in the energy storage space. We're a key player in that value chain, and we aim to be the preferred vertically integrated primary vanadium supplier into this space. Just to give you some quick overview of where our assets are located in South Africa and the world famous Bushveld complex, which is host to the world's largest platinum resources and chrome resources. It is also host to the world's largest primary vanadium resources. We have a lot of these deposits at scale and at high grade. And we own 3 deposits: the Mokopane project, which is on the northern limb, Vametco deposits, and the Brits deposit, which is an extension of the Vametco resource. And then the 2 plants, Vametco and Vanchem, are well connected to these deposits through logistics infrastructure, which is quite well established. And that logistics infrastructure itself is quite important when you consider the way our plants are set to operate together. In fact, the picture you see there is a picture of Vametco, which is in Brits, and this one is the picture of Vanchem, which is in Witbank. Those 2 plants are connected well with logistics infrastructure. Why is that important? It's important because they are, from a processing point of view, very similar metallurgical processes that we follow. There's a lot of synergies between the 2 plants. So in some ways, you can look at them as a single operation that is just geographically dispersed. And Vametco is serviced in terms of ore by its own mine, the Vametco mine, as well as the Brits deposit, which is adjoining it. And we see that Brits deposit as a future source of ore for Vametco. And then what we do is we process that to produce nitrovan, AMV, as well as MV ore. But the concentrate we produce at Vametco can also be processed at Vanchem, which is located some 150 odd kilometers away. And Vanchem is a processing plant that doesn't have its own resource base, but can process material from Vametco. Also, we intend to supply it with material from the Mokopane deposit and also from third-party sources which are available and which we're always exploring. Vanchem's production broad range of vanadium products, V2O5, ferrovanadium, vanadium chemicals, and in time also vanadium trioxide. So when you combine that together with our electrolyte plant that we're building, we have a very broad suite of vanadium products that we can supply the global vanadium market. Now, I will take a few minutes to just talk about the 2020 performance and our 2021 guidance. We released our results last week. 2020 production of about 3,600 tons of vanadium. We key highlights I'll just highlight here in terms of 2020 is that that 3,600 production was a 24% increase on production in 2019. Our sales were up 61%, which is very good to see, and our group cost per unit sold at $29 per kilogram V. What is particularly important to highlight is that as we increase our production volumes through our plant, through fixed cost dilution, we expect to see the cost per unit sold to continue declining going forward. Average prices for vanadium in the year were quite low at about $23.40 per kilogram V, and that contributed to the company making a modest loss of $15 million in EBITDA loss there. Very, very pleased that we were able to draw down financing of $65 million towards the end of last year from Orion Mine Finance, which is a good vote of confidence in what we are doing, consequent to which our cash and cash equivalent position was about $50 million, with a net debt position of $33.7 million. We have funded our business with significant contribution from debt, and we've done this during a time when the capital markets were quite disrupted by the COVID pandemic, also a very low vanadium price in 2019. So we're very fortunate to be able to have raised the capital we did to continue driving forward our growth agenda. In terms of guidance and outlook, we are looking to strengthen our balance sheet going forward to increase cash flow through margin expansion as well as debt reduction. We have a cost savings program underway, and we expect that to reduce our costs during the course of 2022. In terms of production, we're looking at 3,400 to 3,600 production for 2021. Our current refurbishment program underway at Vanchem, we anticipate by the end of 2022 to be in a place of a steady state production run rate of between 5,000 and 5,400 metric tons of vanadium per annum. Improving operational stability in H2, particularly at Vametco, is a key priority of ours, and also continuing to implement synergies between Vametco and Vanchem. In terms of vanadium prices, they're currently at about $40 per kilogram V across all markets. It's good to see that kind of improvement from the average of $23.40 of last year. Year to date, we're seeing vanadium prices of about $33. So we hope to see a continuing trending up of the vanadium price, which will certainly be helpful to our cash generation going forward. In terms of operational highlights, 3,631 metric tons of production. What you'll see on the right there is the profile from 2019. Obviously in 2020, what we had there was, for the first, we had a full year of Vanchem contributing to our production volumes. Because of the COVID shutdown, we lost about 380 metric tons of production. This year, we have guided 3,400 to 3,600 metric tons of vanadium, and we will discuss that guidance a little later. In terms of our costs, you will see there that our costs have come down in terms of group costs, including sustaining capital, coming down from $37 to $29. And again, that's just emphasizing the impact of fixed cost dilution as we increase throughput. And that's why it's quite important for us to continue increasing our throughput through our plants. In terms of Bushveld Energy 2020 key achievements to highlight, we established BELCO, the Bushveld Electrolyte Company, as the operating entity for the electrolyte manufacturing business You will recall that we have partnered there with the Industrial Development Corporation. We've broken ground on this plant construction in East London, and we expect to commission this plant during 2022. We also made important investments in Invinity, which was quite profitable for us, and also Cellcube in Austria, where we own 25.25%. We have sold down our interest in Invinity, as we announced to the market not so long ago, and have used those proceeds to make our investment into Cellcube. We also signed an electrolyte rental contract between Pivot Power, which is part of the EDF Renewables, and Vanadium Electrolyte Rental Limited. And third, that's a joint venture partnership with Invinity Energy Systems. So it's a collaboration that we continue to develop with them. And then finally, we have Cellcube, which won that contract to supply a 4 MWh VRFB for the mini grid project at Vametco. Post-year-end developments, as I mentioned, we monetized our investment in Invinity and realized $13 million, which is a good performance considering we invested $5 million, which has allowed us then to direct those proceeds towards Bushveld Energy's 2021 project in a way that still allows, obviously, Invinity to now continue as a listed company that's well funded and which is doing great work in the energy storage space. 25.25% interest into Cellcube, which is now funded to grow its production capacity, and we look forward certainly to positive developments in that respect. We have a right of first refusal for supply of ore to these two important VRFB companies, and we have commenced the construction of our electrolyte plant in June in East London, which is quite exciting. Talking about Cellcube, Cellcube obviously is a company that we've known for a long time, 20+ year development and production history, more than 130 systems deployed to date, and we own 25.25% interest in this business. In H2, the company secured 13 MWh in signed orders for its systems. It has raised capital of $30 million recently to scale up production to 30 megawatts. We participated in that financing. And also, I just want to point out that this is a very good demonstration of our strategy to leverage what capital we have and bring in third-party financing to support scaling up capacity in VRFB manufacturing. Because out of that $30 million as Bushveld, our contribution was about a quarter, with some $22 million coming from other investors. So that's a success already, and the company is now funded, and we look forward to seeing it grow and emulate, if not exceed, the successes we've seen with the likes of Invinity. I'm going to now hand over to Tanya Chikanza to just talk us through the full year results and talk to the financial results that we released last week. Thank you, Tanya.
Thanks, Fortune, and good morning, everybody. I'm pleased to give you an overview of the company's financial position for 2020, as also just to look at what we're looking to do in the current year. As you can see from the table in the EBITDA order on this slide, 2020 was a challenging year for the company, predominantly given the weakness that we saw in the vanadium prices, primarily. As Fortune mentioned, production was up 24% at 3631 MTV over 2019, and sales were healthy at 3842, a 61% higher than the 2019 levels. And yet still, we saw EBITDA fall significantly to EBITDA fall significantly to just under $15 million. I'd just like to unpack a little bit the waterfall on your right-hand side in terms of some of these movements. From an operating perspective, operating costs perspective, we see the increase in cost of sales there from 47 to 73.4 million. It reflects Vanchem's first full year of production, 12 months, compared to 2019, where it only produced for a month. You will recall that Vanchem joined the BUSHVELD stable in November 2019. In addition to that, we saw an increase in maintenance costs and energy costs at Vametco. Energy costs, as you know, in South Africa, they tend to go up annually, and that's an increase that is a given increase. And from a maintenance cost, when we saw those levels of maintenance prevailing through, they led us to decide on the timing around the full maintenance that would be required for the operations, which then led to the 35-day shutdown that we recently did in March this year. The other component of costs in there is operating costs and admin costs. And I'd like to just unpack that movement of 36 million to 31.5 million. From an operating cost perspective, it includes selling and distribution costs and other mining costs, as well as idle plant costs. The idle plant costs increased because in South Africa in 2020 March, there was a lockdown, a national lockdown, and so Vanchem in particular did not operate for some days, and that was a major contributor to that increase in costs. Vametco was deemed an essential service partially through the lockdown, and so it was not as badly impacted. The other mining costs in there are also COVID related. We increased the level of diligence to ensure protection of our operations and of our employees, and that required us to introduce new ways of working, which reduced our efficiencies. From a selling and distribution cost, this went down from 7.6 to 4.8 million. And if you just think about it, some of these costs are actually predominantly related to the value of sales. And so the reduction in the prices that we saw vanadium coming through also impacted and had a positive impact on selling and distribution. From an admin cost perspective, they fell by 5 million, which is pleasing. Part of that fall was because the staff costs decreased. In 2019, we had some legacy costs from our acquisition of Vametco, and 2019 was the final year that we were paying those off. So in 2020, we saw those numbers now fall down to about $8 million a year. It's important for me to highlight that these staff costs actually relate to the costs of anyone who's not directly linked with the production. So that's head office costs, as well as management costs of the operations, both at Vanchem and at Vametco. Okay. If I just now look at total cost and the unit cost of our operations, you see we've already talked about this, that the cost of sales actually went up. But I think this slide, what I'm trying to illustrate here is that by bringing on board Vanchem, we're able to actually share the cost, the fixed cost that we have in the operations as our production increases. So the increase in production and the units sold that you see there coming up from the 2392 to 3842 in the 2020 had the benefit of actually spreading those fixed costs. And we see the unit cost falling from 36 in 2019 to 27. And on a total basis, that unit cost fell from $37 per MTV from KGV to $29 per KGV. And I think this really talks to the benefit of the strategy that we have around continuing with our growth strategy to make sure that Vanchem and Vametco can continue to grow and be prepared to produce the additional ounces, tons that Fortune was talking about. If I now turn to just looking at the balance sheet initiatives, Fortune already alluded to the $65 million that we raised with Orion Finance. That $65 million is made up of a $35 million convertible, which is a 3-year term, as well as a $30 million PFA financing for the growth of our operations, primarily for Vametco Phase 3. We used some of those proceeds to retire the Nedbank term loan, which because the rand was so strong by the time we did this, the 250 million rand facility actually cost $17 million in terms of paying off. We were also able to retire some of the Deferco convertible. The 11.5 million, which was due and payable for 2020, we successfully negotiated for 6.5 million of it to be converted into Bushveld shares, and the remaining 5 million we paid as cash. And so at the end of the year, we had a net debt position of 33.7. Looking into 2021, we have proactively renegotiated the revolving credit facility at Nedbank around the covenant testings that we have. As you will be aware, that Vametco, where this covenants test is done at, had some challenges earlier in the year over and above the planned maintenance scheduling that we had of 35 days. And so we've renegotiated those facilities and are pleased that we have a waiver for June testing period and also relaxed covenants for December. We've also started our negotiations with Deferco around the 11.5 million convertible, which is due at the end of this year. And we anticipate that 5 million of it will be payable as cash and 6.5 million of it will be converted into equity. Apologies, I'm just having some challenges with my... Okay, here we are. Okay. From a capital expenditure perspective, we are planning to spend about $26.8 million this year. Most of that will be spent on Vanchem as we ramp up on the production at Vanchem. We've spent about $8.6 million of it to date in the current financial year. And also the other initiatives we're taking for this current year is we're also really pleased with the reduction of the unit cost that we're already seeing as we integrate Vanchem and Vametco and see the synergies coming through from that. We are expecting to gain some cost savings from 2022 of between $2.5 and $4 million per annum. And that will be through just looking at our procurement and how we procure from our suppliers and getting some gains from that. Pleasingly as well, as of the 27th of June 2021, our cash balance was at $31 million. I will now hand back to Fortune to take us through the guidance and the market outlook.
Thank you, Tanya. So talking to the vanadium market, again, most of you are familiar with the vanadium market in terms of what vanadium is used for. Two main applications, as an alloying element for strengthening steel, as well as its applications in the chemical space, particularly in the growing VRFB space, where it is used in the energy storage sector. The steel sector remains the underpin for vanadium demand. We expect it to continue to be, still accounts for north of 90% of demand for vanadium. I think what's important when we're talking about demand for vanadium is the role that China will continue to play in that respect. As a big steel producer, implementing standards to phase out poor quality rebar and introduce higher quality, higher strength rebar in its sector. It is those standards that have resulted in the intensity of use of steel in China growing over the last few years and is expected to continue growing. I think what's quite interesting is that a few years ago, you would have had us say that even if steel production maintained a flat outlook, the demand for vanadium in steel would expect it to continue growing on account of that increasing intensity of use of vanadium. Well, the good news in that respect is that actually steel production, while globally it has been relatively flat, in China particularly, it has been fairly robust. We have seen steel production grow by 5% between 2019 and 2020. Now China produces more than 1 billion tons of steel. This year already, we're seeing the steel market continue to be fairly robust in terms of production, and that will continue to support vanadium demand going forward. Roskill expects the demand from the steel sector to be in the order of 2.7% CAGR through to 2030. So that's a good underwriter of demand. The application of vanadium in VRFBs in energy storage itself is going to also contribute significantly to demand, according to a study by the World Bank looking at different commodities and how demand is impacted by the energy transition. You'll see that there's an expectation here that vanadium demand will grow by as much as 189% through to 2050. If you look a little bit closer in terms of time, Navigant forecast that by 2027, we should see about 100 gigawatt hours of new energy storage applications deployments, per annum. And an 18% penetration by VRFBs of this market will require us to almost double global production of vanadium. So the demand from this space is going to be quite significant, and we think potentially a game changer. What gives us a lot of confidence and hope in this respect is the fact that by far the most deployments of stationary energy storage are expected to be in the long duration space, which is ideally suited for vanadium redox flow batteries. In terms of supply, you will see that supply is still obviously dominated by co-production, accounting for about 72% of production. That is quite significant and important because when we talk about the outlook for vanadium and vanadium prices, while demand is solid, the question is, and while demand is growing, the question is what is happening on the supply picture. Now, if you look on the top right, you'll see the production versus capacity for co-production, which is mainly China and Russia. The important point to highlight here is that with iron ore prices of about $200 per ton, co-producers have every incentive to rely exclusively on their own feedstock for production of steel. As you know, their feedstock is where they produce vanadium slag from. The incentive to blend that used to be there when iron ore prices were in the order of $55 doesn't exist anymore. With steel prices north of $1,000, also the incentive for co-producers to produce as much as they can. So what we have seen is we've seen them operating at close to full capacity. What does that mean for vanadium supply going forward? It means that they are unlikely to be able to respond to the growing demand. And in that context, we believe that the parties that are best positioned to respond to that growing demand are going to be primary producers. Now, when we talk primary producers, the next question one has to then ask is, what is the incentive price that is required to incentivize new supply to come on stream? And I think it is in respect of this that we believe that there remains some upside in the vanadium price. Because if you look at the projects under development out there, if they are in Australia and they are of a primary production nature, the vanadium prices they need just to justify the economics of those projects are significantly north of the current vanadium prices that we are seeing. So the increases in the price that we've seen, not surprising to us. We certainly welcome them. We still think there is more upside than downside in terms of vanadium prices on account of the need to incentivize new supply, as I've mentioned. And for that reason, by the way, these views that I've just explained are supported well by Roskill in terms of their view on the market balance, which is illustrated on the bottom right-hand corner there. Important to highlight that in terms of the supply forecasts that are used in this chart, there is some assumptions around new supply that is going to be developed. Within that is not only primary production, it's also some potential secondary production, as well as some co-production supply assumptions. When we get to look at those numbers in a much more granular view, we typically as a company take our own views around which of those projects we think have a greater chance of success to come on stream. And depending on which assumptions you make, that deficit picture could actually be even more severe than it looks right now. Talking about VRFBs, the question is always, how real is this opportunity? I'd say here, I think in the last few years, we have seen an acceleration of the energy transition. We have seen policies being put in place to promote the shift towards greener sources of energy. We've shared before with you a chart that talks to the growing importance of electricity in terms of its contribution to world energy demand, with the world consuming energy in the form of electricity more and more. But important point to highlight here being that going forward, most of this electricity generation is going to be coming from renewable sources. And within that, energy storage is going to play a significant role. In that context, it's good to see the growing momentum in terms of deployments of vanadium redox flow batteries, whether in China or the rest of the world, as illustrated in this chart. In China, particularly, we're seeing projects of hundreds of megawatt hours in scale, which is really what you want to see to build the kind of momentum that you need for the technology. Now, I'm going to take the next few minutes to just talk about our outlook in terms of production. I said at the beginning that we're prioritizing at Vametco stability. At the beginning of this year, particularly, we experienced some stability issues which affected our production significantly. You'd have seen this in our Q1 production update that we presented. We have had to make a few changes, but most notably, I'm pleased to say that we have now put in place a senior operations leadership team at head office, which is led by our operations director, Francois Nodier, who started at the beginning of January of this year. And he's got a full team of engineering head, business analytics, quality control, and with his full team, they are able to provide the kind of support that Vametco, Vanchem, and Belco will require. Now, one of the outcomes already of his leadership is a real look at how we do our guidance and we provide our guidance to the market. And here I want to just be candid and make the point that in the past we've tended to give our guidance based on aspiration, based on what we wanted to see the plant produce. Of course, it was based on some decent analysis, but I think an important change going forward is that we are prioritizing predictable, stable production, and have decided that we will set our monthly production run rates at Vametco and at Vanchem based on what we have seen the plant deliver sustainably, continuously. And that is why when you take a 240 metric tons vanadium production run rate for the rest of the year, it necessitated us downgrading our guidance to 2,300, 2,400. The decision that we took here, what is also important about it is that it allows the plant to operate with discipline around things like maintenance. Proactive maintenance is very, very important for a plant of the age of Vametco and Vanchem. And it also allows us, as we implement improvement initiatives, to ensure that we realize those gains and those improvements on a sustained basis before we bake them into our guidance numbers. And so while disappointing that we've had to revise our guidance, I'm very confident that it was the right thing to do. And certainly following that 35-day maintenance shutdown that we did at the beginning in Q1, we're starting to see very, very solid improvements. And I believe that, Vametco has turned the corner in that respect and is well on its way to meeting its guidance and its targets going forward. On that basis, the other point that I would highlight is that it then influences the way we think about how we sequence our capital initiatives to grow production. We're currently refurbishing Kiln 3 at Vanchem, which we expect to commission at the end of this year, towards the end of this year. That kiln is similar in dimensions to Vametco, and it will see Vanchem operating at about 2,600 metric tons of production on an annualized basis. Taking into account ramp up, we anticipate to be producing at this level by the end of 2022. At Vametco, as I said, there are improvement opportunities that we will pursue. And please do note that when you look at the number that we've provided there for 2022 of 5,000 to 5,400, this is not to be taken as the official guidance for the year, but just to give an indication of the production capacity that we expect from our facilities next year going forward. Important to also point out that at Vametco, we anticipate supplying ore from Vametco. We have an Upper Seam project that we're busy with there, which will supply at least initially 18 months worth of ore supply to Vanchem, with scope to increase that going forward.
That's great. Thank you very much indeed, Fortune.
Apologies for that interruption. In terms of Vanchem, our guidance, we revised the production to 1,100 to 1,200. Vanchem has been producing quite consistently on a monthly basis. The reason for the guidance is really down to the delay in the commissioning of the Kiln 3 that we are refurbishing at the moment. And that delay was occasioned by, among other things, delays in the sourcing and securing of steel supplies for that refurbishment program. Brits will continue to be an important part of our ore supply picture as a potential future ore source for Vametco and Vanchem. And also Mokopane, as we indicated, we expect it to also continue to be a source of ore in the longer term for Vanchem. I think what I'm very pleased with in respect of our Upper Seam project is because this is our deposit, it's our resource base, and the reserve and the resource within that Upper Seam is sufficient to support Vanchem for a much more extended period of time, which means that there isn't as much pressure to get Mokopane into production tomorrow. But that said, we certainly still have plans to get Mokopane into production. In the medium term, I did talk about our expectation to grow production to 6,400 to 6,800 and ultimately to 8,400 as we bring all the other phases of refurbishment at Vametco and at Vanchem on board. Okay, on Bushveld Energy, just very quickly, we anticipate progressing our construction of the 200 megawatt hour electrolyte plant, scaling up our electrolyte rental product with new contracts, which will be quite important to support deployments of VRFBs. We look forward to supporting and continuing the growth of CellCube together with other shareholders. And then our Vametco hybrid mini-grid, we're looking to get to financial close and commence construction of this very important project. The mini-grid project, as we've said before, it's really important in that it provides a proof of concept. It proves the business case for self-generation projects. And we think that is going to be particularly important in South Africa, where the government is moving to encourage large energy users to embark on self-generation projects. What this shows is that you can do that in a cost-effective way, and in fact, you can actually reduce your power consumption costs by going this pathway. So we think it's going to open up significant opportunities for VRFBs. Let me just draw to a close now. Near-term objectives in terms of financial, we're looking to strengthen our balance sheet, increase cash flow through margin expansion and debt reduction. The cost savings initiatives are going to be important as we continue to drive our costs down. Production-wise, growing vanadium production to achieve that run rate of 5,000 to 5,400 by end of 2022 is a near-term target of ours. Technical studies underway to increase production further to 6,400 and 6,800 will be completed this year, and will provide a clear sequencing on how we're going to do that, with 8,400 still in the longer term being a target. I talked about the Upper Sim project, a 900,000 ton reserve there, and a resource of about 16 million tons. So as I indicated, it is quite significant, substantial in fact to support Vanchem. And we're investigating the potential to extend that supply beyond the initial 18 months, as I indicated. And then in terms of Bushveld Energy is the electrolyte plant and the mini hybrids that are very near-term objectives for the company. This chart is a chart I just want to take a few seconds just talking to. If you step back from all the developments and all the work that we have been doing, and you cast your eyes back to 2016, when we were a company with just the Mokopane project, I've done a pre-feasibility study for this project, and we're looking at $298 million to build a primary processing plant and a mine that would produce 5,300 tons MTV. So that's what we were, and we had a market cap of about 17 million pounds. Fast forward to where we are today, we have spent about $150 million, 120 of which was acquiring Vametco and Vanchem, and about 30 in terms of capital expenditure. We have funded this through internal cash, through some equity financing of about $61 million. And within that, we include all the convertible notes that we converted, placings that we did, or warrants that were executed, and net debt of about $73 million. And so external financing about $134 million to build a platform that has got 3 deposits, 2 out of 4 existing primary processing facilities in the world, producing 3,600 plus metric tons today, and on course to 5,000, 5,400 by the end of 2022, building a 200 megawatt electrolyte facility, manufacturing facility, an effective 25.25% interest in CellCube, self-generation opportunities. So here, this is the platform we have built over this period of time. It is a good illustration of the kind of strategy we outlined back then of developing our future on a brownfield platform. That meant that we could acquire production assets. That meant that we could leverage cash flows from those assets. That meant that we could access debt facilities because we were revenue generating. And in the process, build a platform which we believe is significantly worth much, much more than our current market capitalization. And importantly, I've done it at about 1/3 of the cost of building a new plant. I hope that you can appreciate just the value that has been created in that time. And this, as I talked about earlier on, is what over that 5-year period we have put together. In conclusion, what do we have? It's a leading primary vanadium producer and energy storage solutions provider, 2 of the world's 4 operating primary vanadium processing facilities, large long life mines, high-grade open cast deposits, and on our way to becoming one of the largest producers of vanadium. We provide investors with access to fast-growing energy storage sector, and we have a strong vanadium market outlook in the near and medium term, with energy storage obviously providing significant upside opportunities. Our focus is to deliver on our growth and our investment strategy. We have put together, we think, a fantastic platform. Our challenge and our responsibility today is to now execute and demonstrate that we can not only produce vanadium, but we can produce it cheaply, and that we can unlock the value in the downstream energy storage space. I believe that we are well on our way to doing that. I want to thank you for your time, and I would like to pause here now to take questions.
Fortune, Tanya, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions that have come in during the meeting itself, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Fortune, Tanya, obviously we've got a good number of investors on today's call, and you received a considerable amount of questions ahead of today's meeting. So I think what we've done here is we've tried to condense those questions into themes, and hopefully that will address a number of questions in one go. So thank you to those investors that took the time to submit those questions. If I may begin on those before looking at those that are coming in the live event, the first one around really the mining operations. Can you advise on the recent production revision for 2021 and how you will get your long-term target of 8,400 MTV?
Yeah, thank you for that question. And look, I think we can be, as I said earlier on, be candid about the fact that we have not met the expectations we set on Vametco in terms of production. We have revised guidance a couple of times. It is something that we're not particularly proud of. However, I would like to just make a few points. In 2020, we had to shut down operations for a month because of the COVID shutdown. We did not undertake the standard annual shutdown in an effort to try and make up time for that lost production. The result of that has been significant operational instability at Vametco, with several unscheduled stoppages during Q1. Our Q1 performance was not good at all. But what we did do, as I said again, with establishment of an operations leadership team, we decided to go on an extended maintenance shutdown of 35 days. We decided also to change a few things in the way in which our team in the operations are set up. In the past, we had a general manager who would have responsibilities for not only production, not only cost, but would also have some P&L responsibilities and a whole lot of other focus areas. We've narrowed that very, very sharply to ensure that our business unit managers in the plant are focused primarily on producing vanadium, are focused primarily on keeping costs down, with the broader responsibilities sitting with our operations director. So those kinds of changes, plus the rebasing of our monthly production, which is anchored in what the plant has achieved consistently in the past, as opposed to what we hope it can achieve. We think that both of those are very important to getting the plant operating on a stable basis. Operationally, when you don't do that and then a plant misses targets, the next month they try to make up for the targets that they have missed. And what you end up with sometimes is behaviors that can compromise the plant because you're now chasing making up for lost tons. We think that the reset that we have done sets this plant on a path to success. We are due to release our quarterly update for Q2 this month. We can safely say we think that we've turned the corner. We monitor our production on a daily, weekly basis. We can see the impact of the initiatives that we have put in place going forward. So we could have taken the view to try and make up for the loss production in Q1. I think would have just continued to put more pressure on the plant. We took the hard decision to revise guidance and to operate on this new philosophy going forward. So that's with Vametco. But what it also means is that when we think about our growth, we've got a phase 3 expansion at Vametco that we're doing a PFS on. We've got at Vanchem a 3-phase refurbishment program that we're running. We're not doing all of those at once. The PFS studies for Vanchem are currently underway as well. We decided that what we need to do is to actually think about how we sequence this. And the way we sequence it will take into account the imperative for operational stability at Vametco, but also will take into account the need to make sure that the next ton that we're bringing in is the cheapest ton. And all indications suggest that Vanchem will be more prioritized on both accounts. So our commitment to growing our production remains there, but it needs to be executed off a base of operations that are stable, that are meeting their production guidance. And for Vametco in the near term, at least, we've decided that that is what we want to see it achieve.
Thank you very much indeed, Fortune. Before moving on to Bushveld Energy, there was a question around the Mokopane's definitive feasibility study and really what progress is being made there.
Yeah, look, we in 2020 we executed the mining right. Of course, in 2020, because of the pandemic, that also impacted significantly the commencement of the DFS and the necessary engagement with the local communities that is required in order to finalize land use arrangements. We have made an application to the DMR for an extension of 18 months to commence mining activities, and we have begun engagements with our local communities, and we are quite encouraged by the progress we're making there, which will see us then secure a land use arrangement, which then paves the way for a number of these other activities that are part of the definitive feasibility study. I will highlight again the point I made earlier on, that the Mokopane project is important, but these delays in the Mokopane project itself do not pose a meaningful risk to Vanchem because of the fact that we can supply Vanchem's ore requirements from Vametco in terms of that Apasin project that we talked about earlier.
Thank you very much indeed. Obviously, the next few questions relating to Bushveld Energy, one of those was around highlighting the key achievements, which I think you did through the presentation. I think you went through the slide there. There was a question that related and reads as follows: given the large expectation around the vanadium redox flow batteries market, why are you only building a 200 megawatt electrolyte plant?
Look, the electrolyte plant, we actually secured an EIA for 800 megawatt hours, so we can upsize it as necessary. But we decided we'd start off at 200 megawatt hours because we think it is the right level for where the market is at today. Look, it is still relatively nascent. I think we can be honest about that. But it's good that we're seeing demand. And growing. We're seeing a lot more inquiries for electrolyte supply. So we're comfortable that the level that we set it at is the right level. And also consider that at 200 megawatt hours, it will be consuming about 1,100 tons of vanadium. That is, at 5,000 tons production, that is about 20% of our production. We still need to service the steel sector. We still need to service that bedrock of vanadium demand. So it's for those considerations that we sized it the way we did. But as I said, it can be scaled up to 800 megawatt hours relatively quickly. The long lead items, the EIA, have been secured on an 800 megawatt hour basis.
Thank you very much. The next question kind of reads as follows: given the President's recent announcement for raising the threshold for companies to produce their own electricity from 1 megawatt to 100, what are Bushveld doing to prepare for the growing demand in the private renewable energy market?
I think I saw a question about the progress Bushveld Energy has made. Since we launched Bushveld Energy, we were clear that a big chunk of the work Bushveld Energy would be doing is advocating for VRFBs within the energy mix. And in South Africa particularly, we did quite a lot of work, and including making contributions to the integrated resource plan that was being developed, making sure that the powers that be understand that VRFBs are not in a lab under development somewhere, but that they are in commercial deployment and they're a viable solution for long duration energy storage. I think that if you think about when we started to where we are today, just from a policy environment point of view, we're pleased to see that in South Africa particularly, we have an integrated resource plan, one that has made very bold commitments to renewable energy going forward in terms of new renewable energy capacity. It has made very explicit allocations for battery energy storage, 2,000 megawatts. We're expecting a 500 odd megawatts of battery energy storage tender to actually go out. The Department of Mineral Resources announced this a few months ago. The push to increase the threshold for companies to generate their own electricity from 1 megawatt to 100 megawatts. That is a very, very big development because obviously it opens up thousands of megawatts of opportunities for energy storage, which is required to pair with renewable energy. What we are doing to position ourselves in respect of that, we started the Vametco mini grid project at a time when the cap was still 1 megawatt, and that's why we sized it the way we did at 3.5 megawatts of PV and 4 megawatt hours of VRFB. What we're pleased with there is that the project economics are good. There is interest from third-party funders to fund that project, but from a Vametco perspective, this project will supply power to Vametco at a cost that is equal or less than what we are paying to the local utility. So that project is very, very important in proving the business case for these very same self-generation opportunities that are now being opened up at the scale that they are today. So it positions us really well as a company, but also for VRFBs plus renewable energy propositions.
Thank you very much, Fortune. The final question around Bushveld Energy relates to reporting, and will you be releasing both Q1 and Q2 reports together?
Yeah, look, the latest update on Bushveld Energy's developments, we provided it in the company's annual report. We will provide Bushveld Energy updates when there are key milestones to report on. We have announced a number of developments in Q2, which includes the CellCube Enrox investments update, commencement of the construction of the electrolyte plant. Look, unlike vanadium production, where every day we are producing vanadium, right? I think you need to appreciate that with Bushveld Energy, it's projects that are being developed, and a lot of our updates are going to be milestone based. As we meet those milestones, and we have something material to report, we will certainly be reporting to the market.
That's great. Thank you very much. Just moving on to non-core assets, and we've had a number of questions that have come in during the live meeting all around Lemur. So what is generally happening with Lemur?
Not a lot to talk about at the moment. Look, we've made the point that it is a non-core asset, that will provide update as their material key milestones. It's a project that is ticking along in terms of finalizing the bits that remain, around the studies. As you recall, the Lemur project, it's not just a coal mining project. It's tied with a power generation license. But we've made very clear that it is non-core. But while it is non-core, it is not a project that we have disposed of. We continue to look for opportunities for parties that can work with us to take this project forward. As there is developments on it, we'll provide them to the market. It is, I just again want to reiterate that the fact that it is non-core does mean that it does not occupy a significant amount of management time, which is focused on vanadium.
Thank you very much, Fortune. The final categories of questions all relate around your listing and your share price. And again, we've received a number of questions from investors during the meeting itself, so thank you for taking the time to do that. Can you advise on your capital allocation and if you will look to introduce some form of share buyback?
Yeah, look, we did announce a capital allocation policy back in 2019, and the framework we talked about imposes consistent discipline while enabling us to fund several capital expenditures items through market environment that have been changing with quite a bit of price volatility. In order of priority, you'll recall that we said that our capital will be allocated towards, number one, maintaining our existing operations and ensuring the maintenance of stable and efficient production across all our operations. Secondly, supporting a strong balance sheet that is resilient through the vanadium price cycle. And so some of the de-gearing efforts that we talked about, you can imagine that they will be important for us. Then supporting a strong balance, and then investing in our growth projects that we have already announced, through organic growth to achieve that production level of 8,400 metric tons of vanadium per annum, as well as the downstream integration in the medium term. I think returning cash to shareholders, look, when you look at the share price that we have today, if you're sitting with excess cash, you would be right to consider, things like share buyback. But we think that right now, the priorities that I've outlined remain the important priorities that will ultimately deliver value for our shareholders. And certainly, that's what we remain focused on.
Thank you, Fortune. Number of questions came in around directors and share purchases. Why have the directors not bought shares in the open market, as this would show actual confidence in the business and reassure shareholders?
Yeah, look, directors can, but they can only buy shares during prescribed periods and when they're not aware of price-sensitive information. I think the challenge for a company that is not yet at a steady state of production, with the kind of initiatives and the number of initiatives that we are busy with, is that they are almost always aware of price-sensitive information. And given the number of those activities that we've announced and conducted in recent months, the preparation of the 2020 full-year results and now 2021 interim results, there just hasn't been really an opportunity for directors to go into the market to purchase shares. And I'll tell you that, again, with share prices that we are seeing today, there is a very, very strong incentive for people to go and buy shares, myself included. But we do have regulatory restrictions that do constrain us.
Thank you. Next question is all around your listing. Why have there been delays regarding a dual listing?
We went quite some way in terms of the listing in South Africa. We did talk about the fact that we do see capital pools that have a very strong affinity for our story. The reason we couldn't proceed with it was that was down to the regulatory requirements, the way in which we acquired Vanchem, and the requirements to consolidate Vanchem's numbers into our financial reports in terms of the pro forma reports that need to be prepared. It just became practically impossible to do that until we had a history of Vanchem consolidated numbers in our books. So that was the constraint we had, why we couldn't move forward with it. I think you'll see in our annual report that we reiterated our interest to do that. We now have the sufficient history of consolidated reporting with Vanchem as part of our books, which would allow us to move this project forward. So all I can say is, it is one to watch, and we will provide an update in due course. But the delay until today has been a regulatory constraint one.
That's very kind of you, Fortune. So this will be the last of the pre-submitted questions. I am mindful that we are 10 minutes through the time that we said, but obviously let's keep cracking on and we'll look at the live questions shortly. But the final question reads as follows: is whilst acknowledging that the progress has been made by the company, how is the company looking to address the massive disconnect between the share price and indeed the company value?
The chart that I showed you earlier on, which talks to, our journey between 2016 and today, I think it makes it fairly clear that there is a big disconnect between the fundamental value that we've created and the market cap that we do have. Also, when you compare our company with peers as well, so that disconnect is not lost on us. There are a number of things I think that we will prioritize. The first one is to the extent that there are any questions around our execution capabilities as a company, particularly in light of the revisions of guidance that have happened. We do need to address that and address that very quickly. I believe that we're doing the right things, and I'm comfortable that the upcoming updates will demonstrate that. Secondly, is as part of not just about production, it's also about our costs. And as the vanadium price environment continues to improve and people see the company generate cash, I think that will flow through. But we do have to also increase, I believe, our engagement with the market, which is something that we are going to be doing. And certainly this engagement we are having today is part and parcel of that process. Final point I will highlight is that we continue to have a challenge with a register that is predominantly retail. And to be clear, we have great appreciation of retail investors and shareholders who have carried this company, quite frankly, to where we are today. But I think it is also fair to say that there is value in having institutional shareholders on board. The challenge there has been we haven't really been to the market to raise equity capital financing since 2018, in fact. And a lot of institutional shareholders will not build positions in our company on the secondary market. They will wait for events, whether they're placing that allow them to come in a meaningful way. We'll continue to explore opportunities like that, but the engagements we do have with institutional shareholders are certainly encouraging. So I'm not giving you one straight answer here around how we can close the gap. Unfortunately, I don't think there's a magical answer. It's a set of initiatives that we're doing. And I want to go back to the point I've always said before, that while we do all of that, at the center of it has to be demonstrable value in building up the assets we have and making sure that we are executing our strategy and we're delivering value in our assets.
Thank you very much indeed, Fortune. So that really concludes, hopefully, a summary of all the questions that we received ahead of today's events, and hopefully as well took on some of the content that has been submitted during the meeting. Mindful of your time as well as everybody else's on the call, Fortune, but if I could just ask you to open up the Q&A tab. You're seeing there investor questions that have come in, and I just wondered, obviously, if you wouldn't mind just scanning through, perhaps picking up on anything that you feel either needs reaffirming or that maybe hasn't been touched upon in the presentation. And to all the investors that have taken the time to submit calls, we will present all the questions to the company, and obviously where it's appropriate, we can produce responses to those questions, and as I said, we'll notify you by email when they're ready. So Fortune, if I can just hand back to you perhaps just to maybe have a look through those questions. Apologies, there's quite a few there. If you were to take them all on, I think you'd be here for the rest of today, but I'll hand back to you now if I may, sir.
Yeah, there is quite a number. Tanya will assist me with some of the financing related questions. So let me just read some of these questions and then we'll go through them. So there is a question in respect of our production costs for 2020 for Vametco and for Vanchem. So that's a question that Tanya will talk to. And then there is also a question in respect of the uplift in production to the end of 2022 is over 50% from current levels. How confident are you of achieving this, given that over the past year, production estimates have been reduced? So I will talk to that. I saw another related question to this one. How will the company ensure production targets are met by 2022? Given that targets to date have been missed, and what is our message to reassure shareholders? So I'll take that question together like that. And I will ask Tanya to comment on the cost question. So look, if I can go to the chart where we showed our production ramp up. There we go. I indicated that the Vanchem is currently operating with it's got 3 kilns. It's operating with 1 kiln, and the biggest of these kilns, which we call Kiln 3, accounts for 50% of the capacity of Vanchem. So that's the one that we prioritized in terms of refurbishing. That plant is currently being refurbished, that kiln, and we expect to commission it later this year, towards the end of the year. It's got capacity to produce at 2,600 tons. The kiln is similar in dimensions to the kiln at Vametco. And as I said, this one is not one that we're doing studies on. It's one that we are in construction on already in terms of that refurbishment plan. If you consider a production run rate of this plant at 2,600, and then you look at a Vametco that produces at a rate of 240 tons per month. Now, 240 tons per month, you don't have to multiply that by 12 to get a sense of what the annual number is, because one of the things we do going forward is continue to insist on the annual maintenance shutdown over 21 days. So you take that 240, you multiply it by about 11.3. That'll give you about 2,650 of production. And notice that we are talking of rebased numbers. So as I said at the start, that we've moved away from setting our production guidance numbers based on aspirations, but setting them based on what we've seen the plant actually achieve historically. So that's the basis on which you realize a 5,000 to 5,400 kind of production level. And at the driving this work is an operations team that has a very good track record. Francois comes from running much bigger, much more complex operations in terms of people, and he comes with very good turnaround expertise and experience, and the changes that we've made in the plant, we already are seeing the improvements thereof on a weekly basis. So we're comfortable that it is something that that is achievable. I should highlight, however, that this is not to be taken as the guidance number for 2022. We will provide the actual guidance towards the end of this year. What we thought to do is to provide you a pathway to how we get our production up to 8,400 tons per annum. Tanya, are you ready to comment on the cost question?
Yes, sure. So we have revised our guidance, as Fortune said. So the guidance for Vametco, where with the production now set for between 2,300 to 2,400 per MTV, our guidance for the cost is in US dollars $23.7 to $24.2 per kgV as a range. That's the unit cost. So I think that's as a C1 cost, and I think this question is looking for with the refurbishment. So if we look at just the capital costs at Vametco, we are planning for around $6 million for the year. So that would take your all-in sustaining to around a range of $26.3 to $26.7 per kgV. The one word for caution, obviously, is that I'm quoting in dollars, but obviously that is dependent on the exchange rate, as most of our costs are incurred in rands. From a Vanchem perspective, as we've been talking about, Vanchem is still ramping up, so its unit costs are still a little bit higher, but the production is coming out nice and strong. And so we have revised the guidance to $30.3 to $31.1 per kgV. And if we look at the all-in, most of the capex that we are spending at Vanchem will go to growth capital, so it would not fall under sustaining. And so, the $11.3 million of it that we're expecting to spend is actually growth. So from an all-in sustaining, we're looking at around, at the present moment, $33 to just under $34 per kgV. Again, once our production is up and running, we really have expectation that these prices will fall. If I look at 2020, for those are basically the ones for 2021, these numbers that I've just given you. For 2022, that will obviously come through with time, later in the year. But what I want to just flag again are the cost-saving initiatives that we've been talking about around procurement, which on a group basis, from 2.5 to $4 million savings from 2022 on an annual basis.
Thank you, Tanya, for that. So I'll go to the other set of questions. There is a question that says, why haven't we sold any of the iron ore? And I imagine that is talking to the fact that we've got large iron ore deposits. We don't talk much about the PQ project in Mokopane today. When we produce vanadium, the calcine dump is sitting with about 54% Fe with some 13.5% titanium dioxide. Look, I think when iron ore prices are about $200, it is interesting to see whether we can sell that material. And we have certainly fielded quite a number of inquiries around that. Nothing has materialized into specific sales. I don't think that you want to set if you're going to do anything there, it's going to be very opportunistic. But our focus has been on the core of vanadium production. To the extent that there's opportunities to sell any of that calcine material, yes, we certainly will consider that. I have to say, though, internally, we are of the view that the kind of iron ore prices that we do see today, and a lot of analysts will confirm this as well, that that's not a long-term view on iron ore prices. In time, those prices will come down. But it's not something that we do nothing about at all. It is something that we keep an eye on. But it is not top priority, admittedly. Let me just go to a few other questions. Do you recognize that changes to your comms strategy is urgently needed? Do you realize that small bite-sized chunks of news is better than long periods of silence followed by an lengthy RNS? And the question also talks to the need for greater transparency, for example, around things like the CellCube contracts and why we haven't disclosed those. I think talking about our comms strategy, I don't know that there is a single answer to that. We did decide that we will move to reporting on a quarterly basis because for a producing company, that is more standard to report our production numbers and our costs on a quarterly basis. Is there a case for putting out more in between those quarterly updates and just ensuring that the production updates are focused just that on production and cost? I think that's a point that we can certainly consider. One does hope, though, that as we put out these quarterly updates, that the progress of the company is evident. But as I said, there's no one answer here. The need for digestible news flow is one that is noted, and we'll certainly take that on board and consider it. I have to say, though, in respect of that I think in terms of just our core production numbers and our costs, that will continue to be reported on a quarterly basis, which is typically standard with producing companies.
Fortune, what I thought I might do is just jump in because I know you've been going for an hour and a half, and I still see questions being submitted. So perhaps what I do, I know investor feedback is particularly important, and we will redirect investors to provide you that feedback. But perhaps if I could just ask you maybe just to have one final scan, see if there's a final question that you would like to pose, and then if I could ask you for a few comments to wrap up, and then we'll redirect investors to provide you with some feedback.
Yeah, can I just make the point? I think the questions are great, and it's fantastic to receive them. One of the things we will do, we'll take all of them, and I think there's actually a good case to be made for using these questions as a basis for some communication with investors. We'll figure out how we do that, but I certainly would want to come back to you on those questions. It is a lot of questions, which is fantastic to see. I want to just make perhaps some few concluding remarks, and I'm going to go back in doing that to one of the slides I gave in conclusion. I think that we have come on an incredible journey as a company. I think that we have been very successful in putting together a very compelling asset base. I think that the narrative we have shared around energy storage has certainly taken hold. It's good to see companies like Largo establish clean energy focused platforms. I think that our imperative now with the asset base we have, and I just want to reiterate that is very clear to us, is execution. That is where we're putting a lot of our focus in terms of the human capital that we have put in place, the leadership structures that we have put in place. We do need to demonstrate that we are competent, capable stewards of these assets. I believe we are, and we will be demonstrating that. The vanadium price volatility is something that we don't have control over, but we can control our costs. We can make sure that we're a low-cost producer and that we're producing vanadium into this rising price environment. So I just want to conclude on reiterating that we are up to that challenge. I said that our Q2 update is around the corner, and I certainly look forward to engaging with you all again on that, which I believe will demonstrate the progress that we are making. Sorting out our balance sheet, yes, we have built this asset base with debt and some equity, but it was out of necessity in capital market environment that was difficult, and strengthening that balance sheet, some de-gearing is a focus of ours, and then thirdly, ensuring that we have a shareholder register shape that is supportive of where we are going, and in the form of introducing more institutional shareholders is something we are particularly also focused on. So I believe that we are on the right path. I think that what we have seen in terms of our share price, as I said, I am as disappointed as many of you, but I am as excited, more excited about the asset base we have, about the value in that asset base, and I do have every confidence that that valuation gap, we will see it close going forward, and we'll do everything we can, of course, to ensure that is what happens. So I'm gonna pause there, and again, thank you all for your time. Thank you for your questions, and we will be engaging on those questions further going forward.
Fortune, thank you very much indeed, and thank you also to Tanya for updating investors and being so generous with your time with the Q&A. And thank you also, of course, to all those investors that have taken the time to submit those questions. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Bushveld Minerals, we'd like to thank you very much for attending today's presentation. That now concludes the session, and good morning to you all.